What's up? What's up? What's up, y'all? It's the Hustle Lab here with another workshop, another webinar. We did some connecting off camera, but now it's time to jump into the meat and potatoes of today. Jump into the workshop. I have Jada, who is my fellow multi passionate serial entrepreneur, Black girl doing boss things. Okay, I'm going to sing all the praises for Jada. I love her energy, I love her attitude about business. I love her as a person, getting to know her. And shout out to my other Jada, my other business friend who's here with us today, who introduced us. She's the owner of Green Line Planner. She's starting up some new things in the works. So I hope that you're following her personally to make sure that you know everything that's going on in her life. And she's here to talk to us about building a financially stable business, which is crucial. I know, especially in a time where we have this recession that everybody keeps talking about, inflation. She's here to talk to us about budgeting, income goals, and getting serious about the money that's coming in and out of your business. So I don't even have to do too much talking because she's gonna blow y'all away as is, right? So I'm gonna pass it over to you, Jada, and you can kick off the workshop when you're ready.
Thank you for that amazing introduction, Akia. Yes, again, shout out to Jada Day that is on the call right now. Shout out to Black Beauty Near You. And honestly, this workshop is something that is really near and dear to my heart because it's something that helped me grow as an entrepreneur. And I know it's going to help a lot of y'all as well. And really what you're going to take away from this workshop is that for a business is really similar to budgeting for a like personal finances. It's really the same structure, really the same foundation, the same purpose is really just to organize your finances so that you know where you're going in the future, that you can plan ahead, and so that you do not fall short, and that you can really protect yourself from emergencies as well. So we're going to talk about all that stuff today. So let me go ahead and share my screen, and we're going to get into the webinar today. Let me go ahead and find it. You know, Zoom has been Zoom has not been our best friend today, but we're going to go ahead and figure this one out. Okay, let me see. And thank y'all so much for coming on here today. Like, we really do appreciate all of your participation. It's something that we really do cherish and value. So thank you so much. And share this with your friends because anybody that has started a business or that you're thinking about starting a business, share this with them because the number one reason why a lot of Black entrepreneurs do fail is because of lack of funding, because of lack of being able to manage your finances. And a lot of times we just think that we can get money, we're making it, so we're going to spend it. But what we're going to be teaching today is really like you're going to be making this money and then how to reinvest it back into your business, how to pay yourself at the same time, and when to know to pay yourself so that you're not taken away from your business's success. So today's workshop is building a financially stable business. And thank you again so much, Akia, for inviting me on. I really do feel so special and seen. So thank you again so much. So Akia, this this one is not really finished, but it's okay because Akia is here. She is going to tell you about herself and kind of introduce herself as the owner and the founder of Hustle Lab LLC. She's been amazing to me and like even just on personal calls, she has given me so many different tips and really like nuggets of wisdom that I've been able to use in my business. So Akia, if you want to go ahead and introduce yourself, thank you so much.
All right. I'm in the Canva right now, about to add the picture. Life was life in y'all. That's the realities of being an entrepreneur, right? I definitely thought that I did this and I didn't. So that's on me, not Jada. But yeah, my name is Akia. I'm from Trenton, New Jersey, born and raised. And I kind of grew up in an environment where I saw a lot of hustle, hence the hustle lab, a lot of hustle, a lot of ambition, a lot of people selling platters out their house, babysitting kids, customizing clothes, selling sneakers. Like I grew up in a city where the entrepreneurial spirit was there, right? And then when it came time for me to kind of explore what I wanted my career to look like, a lot of people assume because we're young entrepreneurs that we didn't grow up in an environment where entrepreneurs was not like an option. Like it was like doctor, lawyer, teacher, entrepreneur was not up there. That was not on the multiple choice. So when it came time for me to choose my career, I was really nervous about entrepreneurship. And the Hustle Lab was really, truly, and honestly born out of being what I didn't have then, right? I've kind of been an entrepreneur off and on till about, well, since I was 10. And then when I graduated college, I was like, I went full fledged. I'm a full-time entrepreneur now running my 2 businesses. And thank you. And, it's been an amazing journey, and it has been truly an eye-opening journey for me as an entrepreneur. But yes, at the Hustle Lab, what we focus on is helping you grow and scale your business using the internet. That's something I did several times in a lot of the businesses that I started. I've done it for other businesses and other clients. I've worked with people from Cali to New Jersey to Florida. Like it's been an adventure. And essentially, we use social media, podcasts, webinars like this, helping people set up and establish an online presence for their business that matches the physical presence that they want to have in people's lives. That's the best way that I can sum it up and what I tell people. But yeah, that's a little bit about me. I'm excited for this webinar. I've already sung my praises for Jada. I can keep going on and on and on. And I'm excited to connect with everyone who's here live and to hear the comments that people have when they watch this replay on YouTube.
No, yeah, that's awesome. And shout out to the Hustle Lab because again, she's giving me some good tips, y'all. So go check her out. And then for myself, I am Jada Elm. I'm the owner of Green Line Planner, where I am a budget coach for young adults in their 20s. And I really like to focus on that demographic mainly because this is where it starts. This is like the vital moment. Yes, we are in like this sweet spot where we're old enough to make decisions and our decisions do matter, but yet we're young enough to make mistakes. And so that kind of gives us this sweet spot to try new things, to experiment, but also set the foundation that's going to really be able to build upon for the rest of our lives. And so I really think that this is such a vital time. And if you can get these principles now, you're going to be like 5,000 steps ahead of where our parents were and the generations before us. So this is really where my passion comes from. I'm really just seeing my mom. She was a hustler, but at the same time, she didn't know how to manage the money that she was getting from the hustles. So like seeing that dynamic, I was able to turn both of those into my inspiration for Green Line Planner and say, okay, you know what, I'm going to go after this. I'm going to hustle. I'm going to do that. But at the same time, I'm going to be better with my money. And I'm actually going to turn my finances and the money that I'm making into something that's going to be able to continue to build upon it. So with Green Line Planner, I do budget coaching. I have private coaching options for you all. And I also do have plug and go budgeting resources, which a lot of people really love because they can just plug in their personal numbers and they can get answers for themselves, like how much rent they can afford or how is their finances being balanced. So things like that. I have online courses like these here that have been recorded and then posted for sale. And so that y'all can invest in those. And also my Money, My Rules budget planner, which is a physical planner that you can write in for those people that really like the pen and paper type of feel, which I know I'm really like that. I love writing things down on paper. So that is also an option. You can check all of that out at www.greenlineplanner.com/shop/budget coaching. And you can just go to the website and explore. And there's so many different things that you can find there. And also, if you just have any quick questions, you can always DM me on Instagram. I'm here. I love to help. So any questions you have, I'm down to answer. So let's go ahead and get into it today. So
Hold on, Jada.
Yeah, go ahead.
Hate to do it. Go back one more. I want to redo on my slide.
Okay.
Okay, boom. There we go. All right, Jada, you could go ahead. I'm sorry, y'all. I'm silly.
No, you're totally fine. So today is all about building a financially stable business. And so what you're going to learn today is how to set an income and financial goals for your business. This is really, really important because goals are the vision and visions are very important because that's what keeps you going. Number 2 is how to create a budget for your business. We're going to get into details of that. And then number 3 is how to pay yourself from your business. And that's like the major question that we all have. We start businesses because we want to make money for ourselves. We want to be able to employ ourselves and have that freedom of our time and our finances and of our choices. So we're going to get into all of that today. So definitely have a pen and paper out because you are going to want to take some notes. And I do have a freebie for y'all at the end of this. So definitely stay to the end because I will be asking for y'all to send in your Gmail account so I can send out this freebie to y'all. So number 1 is how to set income and financial goals. So number 1 is really the why behind your goals. And this is so important because as entrepreneurs, we have really good days and we have really low days. And on those low days, this why is what is going to keep you going. And a lot of times we get a lot of feedback from our clients and from people that support us, and those really keep us going as well. And that reminds us of our why. And so you really want to make sure that this is like permanent in your brain. And this is tattooed in your brain because this is really like your driving force. So make sure you understand like the reasons why you're creating these goals and what these goals truly mean to you. A lot of times I know that we can be so caught up on Instagram and social media, and we see all these other entrepreneurs doing everything under the sun, and we're like, okay, I want this goal, I have this goal, I have this goal, but like, are those goals really your goals? Are they actually what you want? And those are the types of questions that you really want to ask yourself. So I have here, don't make goals based on someone else's success story. You don't want to, like, yes, you can be inspired by somebody else's success story. And that's why we share these things on YouTube. That's why we share our webinars and share our experiences in life. But it should just be that, an inspiration, and not like the actual blueprint on how your story is going to go, because God's going to write your story, or you're going to have way more control over what you do with your business. And so your story is going to be very unique. It's not going to look like anybody else's, but you can get inspiration to continue to shoot for the stars, and shoot for better from other people's success stories. Number two is someone projecting their fears onto you. You don't want to make your goals based off of that, because somebody can have fears and say maybe they don't know other entrepreneurs that have been successful, and now they're projecting that fear onto you and saying, hey, I don't know, maybe you should have a plan B in place, like maybe you should shoot for this thing. I know doctors make really good money, like maybe you should go to med school. And so like, if you know in your heart what it is that you want, and you know that your goals are speaking to you on a personal level, I wouldn't want you to really kind of minimize your goals just based off of somebody else projecting their fears onto you. Understand that they are doing this because they love you and because they really don't know any better, but at the same time, push past that and really understand what it is that you want for yourself. And then also, don't make goals based on like hype faces or buzzwords on social media. So an example for that is like, oh, I want to have a six-figure business. Like we hear that all the time being thrown around, making $100,000 in your business. And that's like one of our major goals. And it's been kind of set as like a milestone now for us. But like, what if your milestone is making way more than that? What if it's seven figures? What if your milestone is like giving back to other people and being able to make enough money to give back to your family members? Like there's so many different goals that we can have for ourselves individually, that we don't have to follow the social media goals. We don't have to follow the hype phrases and the buzzwords. And I know everybody wants to like save up $10,000. Like that's a good goal to have, but like, why? Is it because you heard it on social media, or is it because like you actually feel that in your heart that that's what you want to do, and that's actually what you need in order to create the money that you need to exactly like to invest in other goals that you have for yourself? So in order to really like make sure that you're not making goals based on these three things, you really want to ask yourself these three questions. One is, how will this goal improve your business? Two is, how is this goal, like, is this goal someone else's goal or is it my goal? And then number three is, why is this goal so important to me? Once you break down these three questions, then you're going to understand like what's for you, what's not for you, what goal is your goal, what's not your goal, and then also like how this goal will impact your life. And then you understand the why behind the goal. Does anybody have any questions about this? Because I really want to like drive this fact home, because before we even start making goals for our businesses and for ourselves, I really want to make sure that y'all understand where the goals should be coming from and why you need these goals and why they're so important for setting your business. If not, we can keep on rolling, because I feel like everybody here is an amazing person in their own respect. And so I feel like y'all all kind of already get this, because I know a lot of y'all individually, but like this is something that I really want y'all to like hone in on and kind of remind yourself, because I need to remind myself of this sometimes too. I know I can get lost in social media all the time. And I'm like, I need to make $100,000. And Germani, that's why you heard me saying like businesses make money, right? Because I'm like seeing things on social media and I'm comparing my business to their businesses. And I'm like, okay, like, do I even have the right to call myself an entrepreneur? But yes, I've been in the game for 2.5 years. Yes, I know what I'm doing. Like, even though I'm having a slow season, that doesn't mean that I'm not doing certain things, that I'm not creating the goals I need in order to be successful. So definitely like get real on this, screenshot this, write it down, because this is something that you really need to check yourself on before you go into the next step. So going into it, when we do create goals, we really want to make SMART goals. And I know this has really been a big thing lately, but I want to really reiterate that SMART goals are the way to go, because they need to be specific. They need to be measurable. You need to make sure that they are attainable. You need to make sure that they are realistic and that they're time-based. When you have goals that are SMART goals, then they become more realistic for you and they feel like you can actually achieve that goal rather than it just being put out as like an idea. So an example of like a not SMART goal is, I want to replace my 9-to-5 income. Okay, But how are you going to get there? How are you going to measure when you actually got there? Like, what does that mean for you? And so, as you see here, we're looking at what the difference is between a not smart goal and a smart goal is. And the smart goal says, my goal is to replace my 9 to 5 income by maintaining a consistent net income of $5,000 a month from August 2023 to November 2023. So you see how it's very specific. You can measure this. You know exactly when it's going to happen, and it's realistic and it's measurable. And so with it, and it's attainable. So when you are looking at these types of goals, you can set a goal, and then we're going to get into this a little bit later, but you can then work your numbers out to make sure that it is realistic. And you can always like tweak this goal and tweak different aspects of it to make sure that it is realistic and attainable for yourself. And that's really what it is. Like, we can be so focused on what's attainable for somebody else and then compare it to what we have, and we feel less than. But honestly, what's realistic for us is amazing. And what we're able to reach on our own individually is awesome. And our level 1 might be somebody else's level 5. And our level 1 might be somebody else's level -1. So it really, like, when you are looking at other people's businesses, honestly, like, it's really easy to get caught up. But I really want to say, like, block all that out, or just use it as really just influences and inspiration and motivation, and not blueprints. Okay, create the blueprint for yourself. And as entrepreneurs, we're supposed to be innovative anyway. So create that blueprint for yourself and create your own path. And that's exactly what I really want y'all to understand here throughout this entire thing. Use everybody else's influences, but be the creator of your own path. Does anybody have any questions about SMART goals?
I do.
Okay, go ahead.
So I have, so what would your opinion be on, because I was listening to a podcast and they were saying, like, everybody wants to be an entrepreneur these days, which is fine. But if you didn't have like the self-discipline to, get up to a regular job, how can you have the self-discipline for your own business? Like, you know what I mean? So what is your opinion on that? Are you just pro of, starting your own thing and going about it that way? Because, like how some people say, if you're going to a job you don't like, you're not going to put as much effort in it as you would if it was your own. Or are you kind of like on that side of, um, oh, like, you do need that sort of self-discipline beforehand and then start your business. Like, like where would you stand on that?
Honestly, entrepreneurs, we are leaders. And so every great leader is able to learn from other people and be able to set certain things before they go out and try to lead others. And so I would say being able to have a certain demeanor and a certain way that you show up at a 9 to 5 actually does reflect how you're going to be able to show up for your business. Because we're trying to escape 9 to 5s, but really, like, once you get into entrepreneurship, you're working like 9 to 9. And so it's a different type of show up. And I understand that, if it's something that you're not doing, if it's something that you don't like, then you're not going to be able to put your best foot forward for it. But imagine if you are showing up and putting your best foot forward for something that you don't like, how much more you're going to be able to put your best foot forward for something that you actually do like. So it's about challenging yourself in those areas, because there's going to be parts of your business that you don't like to do. Honestly, that's just facts. So if you don't like doing a certain part of your business, you have to show up just like you're going to show up for the part that you do like. So it's being able to be in that environment and being like introspective and being self-aware of how you are acting in that environment, even though you don't like it, because that is going to be it's going to be something that's reflected in your business as well. And then you can just like learn as you go. But I definitely would say don't take um don't take the 9 to 5 all the way out, because it is a necessary thing. You have to be able to learn how to work for somebody else, how to be able to submit to certain authorities, and also be able to learn from others. And I think that that is a very important thing that you should be able to experience and learn before you do get into a business, or else it is going to be a little bit harder once you do get into it, because you have to learn certain things like being punctual and time management and stuff like that, that in a structure, it's a lot easier to do. But then when you take the structure off, then it's a lot harder. It's just like bowling. Like, if you have the guardrails up, then it's a lot easier to stay within the lines. And that's like a 9 to 5. But then you take those down, then you can hit the gutter a lot easier. And you need to know what to do and have the ability to put those structures up for yourself. So if you've never seen it before, you never experienced it, it's going to be way harder. So I think the 9 to 5 is a necessary route to go. It does not necessarily like a thing that you have to do, but I think it is really, really important for learning those lessons to help you with entrepreneurship.
And if I
Got it. Okay.
can, oh, sorry, just chime in on what you said, Kyla. Um, One thing that I want people to understand too, and when we talk about financially stable businesses, we often lump small business owners all together, right? But within small business owners, there's different types of small business owners. So you have the startup small business owner that usually is building a business from the ground up, from an idea. Often startup business owners, they are putting their own funds into their business. They're going into their savings, or they work a 9 to 5, or they're, yeah, pretty much they're putting their own funds. That's called bootstrapping, self-funded. Those are all terms you're going to hear thrown around. One thing about the self-funded, the startup entrepreneur, the person building an idea from an idea to a business, or from the ground up, started from the bottom. Now we hear that type of entrepreneur. When she says work a 9 to 9, that's because you're taking on not only the role as the entrepreneur who leads the company, who creates the structure. So, like for example, I worked for Target prior to committing to being a full-time entrepreneur. Target already had the structure. There was an entrepreneur who built the buildings, who designed how the shelves were going to be set up, that decided what products were going to be in the store, that built the employee handbook. That was an entrepreneur that created that infrastructure. And as an employee, I came into their infrastructure and followed the rules that they set out for their company as an entrepreneur. When you're a startup entrepreneur, there are two roles that you're playing when you're doing everything yourself. You're playing the role of the entrepreneur that builds the structure, that creates the employee handbooks, the policies, that says how things are going to be laid out, the branding, the marketing. You're creating all the structure, but then you also have to be the employee and actually work inside of your own structure. And so one of the beauties of being a startup entrepreneur is that you know what it's like to be that employee, right? That was one of the discrepancies I had in jobs. I felt like the higher level management would give me instructions and policies that weren't realistic for the day-to-day task of my job. I felt like they didn't understand what it was like for me to work my position. So I'm often fighting with management to get better policies, or better procedures, or better equipment to do my job more efficiently, because they have no idea what it's like to work the job I'm working. So as a startup entrepreneur, you get this beautiful mix of employee and entrepreneur. You are working inside of your structure, but you have to build your structure, right? You have to build the virtual or the physical building that people are going to show up to. You have to build the structure. And that's one thing that I talk about with my clients. A lot of people think with social media marketing, all I do is talk about social media. A part of this is the structure. When I get on social media, what am I telling people is there? What kind of business is this? What's your return policies? What's your hours of operation? Like, you have to set that up. And so what Jada so beautifully put together was, these SMART goals are serving as the structure for your financial part. You're now creating your financial department by setting this goal. You're now giving your financial department their yearly goal that they need to achieve. And since you're the startup entrepreneur, it's going to be you that's going to be putting in the work. But if you're a person that's like, hey, I never liked being an employee, I never liked working inside of a structure to begin with, which there are some people like that, then you need to find somebody who does like working in a structure. You need to have the funds and the money inside of your business to go pay somebody who will be an employee inside of the structure that you create. You can't afford to not want to work in your business, or only want to show up when you feel like showing up, even though you have hours of operation. You can't afford to have that and grow a successful business. So either you're going to pay somebody who knows how to do this. That's where people like Jada come in. That's where people like I come in, where we're delivering those services for people that don't know how, or don't want to, or just simply just want something off their plate. Either you're going to hire somebody, which goes back to your budget, goes back to your SMART goals. You need to have the funding to do that, or you need to have what you're saying, the discipline to set the goal and execute. So if you know you're a person that doesn't usually come through on the execution, you need to find the help that can. And that's where the pivotal moment happens for the startup entrepreneur, for the person that bootstrapped, that built nothing into something. You need a structure, right? You need to build a structure. And then if you're the only person, if you're the marketing, if your development, if your customer service, you're the only person in your business, you got to work that structure. And as a startup entrepreneur, if you're working a structure, you'll be able to work and develop the policies. Go ahead, Kyla, your hands up. Just take yourself off mute.
Oh, okay, I didn't want to interrupt, but I was wondering where are you guys as far as, like, for the sake of reducing burnout, when being an entrepreneur, because you know how like certain people, they feel like, oh, I got to be the social media manager, I got to do this, I got to figure out all this legal stuff, and people jump straight to go into an LLC without even having a business first. At what point would you guys say, oh, maybe you probably want to reach out to see what prices are for an accountant, like, how just honing in on what your strengths are, but then like, you know you get what I'm trying to say?
Yep, I
Mhm.
I definitely hear you. Jada, I'll let you swing in, but I was just gonna say one thing. As soon as you have that idea that you want to start executing, that's when you need to start saying, okay, here are the things that I need. For example, and it doesn't have to be people, sometimes it can be technology. I believe in delegating either through talent or technology. So either you find someone where this is their passion, this is what they do, they're skilled in it, and you go and hire that person. If you don't have the budget to hire a person, a lot of times getting some, like, QuickBooks is an example. Like, if you don't know how to do bookkeeping, it doesn't help you to just not do the bookkeeping or to ignore the bookkeeping. The bookkeeping has to be done. That's a part of the structure in building a business. But either you can hire a bookkeeper or you can get something like QuickBooks to help you and guide you in your DIY process, right? Or you can have a combination of the two. But the minute that you decide that this is a business idea that I want to execute, you set your SMART goal and say, hey, I have a goal to replace my 9 to 5 income by starting a new business that will generate $20,000 by the end of 2023. If that's your SMART goal, this is where you start to say, okay, here are the things I need in order to get that $20,000. And then that will help you to determine, okay, hey, an accountant is going to cost me $5,000 a year. A social media manager is going to cost me another $10,000 a year. Okay, this is how much money that I need to acquire in startup funds. I need to go apply for some grants to get that. I need to go get a business credit card. Maybe I need to put in a couple extra hours of overtime each month before I quit my job completely. This is where, and I'm glad you asked that question. This is where the SMART goal comes in, because you set that
Mhm.
SMART goal for my business owners that haven't started that business yet, or the business is still in the infancy stage. This is where you set the SMART goal and where you can really lay out, how much money am I trying to make from this? Am I trying to replace my income? Is this a side hustle? How much money do I need to make from this? What is the impact I want to have? And then that's when you start chipping away at, okay, these are the things, the people, the technology that I need to be successful in doing that.
Right, and I 100% agree. I would really just say the main thing is you knowing what you need before you even set these goals gives you the goal to set. So that's really what Kia was saying the entire time, was like once you know how much you're going to need for all the pieces of your business to kind of come together the way that you envision it fully, then that's how you know where to aim for. So I would just really consider all that, like she said, right when you have the idea of that you want to start your business and you have the vision for your business, get the pieces together for exactly how that vision is going to be laid out, and then set the SMART goals to attain that. So thank you so much, Kyla. But moving forward, because I do want to make sure that we get this within a timely manner, moving forward with the goals, understanding how to achieve your goals. So this even like goes into what we were just talking about, right? So we're going to, number one, this is two parts. So we're going to break our large goals up into the smaller steps that we can take to get there. So a lot of times we have goals that are really large, and that's amazing because we want to think big, but we want to also be able to bring it back down to where we are right now. So you can have this large goal, but then know exactly what you need to do right now as the first step and the second step and the third step in order to build that path there. So if your goal is to consistently make $5,000 a month in net income from August to November, then the smaller steps could be is to increase sales calls, increase an ad budget, attend more networking events, and use influencer marketing. So these are things that you can start doing today that are going to eventually get you to that larger goal. And so you need to know exactly what steps are going to help you achieve your goal in order to make it even more realistic. And so you can say, okay, I have this overarching goal of creating $5,000 a month in net income. Now, what is my smaller goal that I can really focus on right now? Let's start doing 25 sales calls in a week. Or let's start doing, let's increase my ad budget to, let's say 200 instead of 100. Let's double it. So there's like certain things that you can start doing now, and like little goals that you can focus on that are eventually going to add up to that big goal. And then before you know it, your goal is going to be there and it's going to be achieved. And you're like, wait, how did I get there? And it's an accumulation of all those small goals being accomplished that then created that larger goal for you. So that's just part one. And in part two, then you need to know exactly, based on your product and service suite, understand how many sales that will translate to revenue. So this is going to determine whether or not your goal is realistic and attainable for yourself. So if you have a goal of making consistently $5,000 a month in net income from August to November, then your product suite or service, say that your private coaching is $500 a month, then you know that you need to keep a consistent of 10 clients per month. Does that seem attainable to you based on your current circumstances? Does that seem attainable to you based on your current ad budget and based on your current marketing plan? So there's things like that that you need to be able to understand, because if your private coaching is only $100 a month, but you're looking to be making 5,000, can you take on that many clients? You know, like it's things like that that are going to be able to determine, okay, what do I need to tweak in order to make sure that my goal is actually attainable? And I had to do this for myself, because if my goal was to replace my current income and I was only charging $100 for my coaching, I would need a lot of clients. And I personally do not have the bandwidth to be playing the entrepreneur and setting the structure, playing the employee and implementing the structure, and also coaching and doing all these things. Like I didn't have the bandwidth to do all of that. So I knew I needed to increase my income, or I need to increase my prices so that I could lower the amount of clientele that I needed in order to create my goal and match that. So there's certain things that you need to set in place and to understand, so that you know exactly what to tweak in your goals so that you can make it more attainable for yourself. And to physically lay this out, I know this looks like a lot. I'm going to explain it. Don't worry. But this is what the freebie is going to be also. So I want you to know that. This is going to be laid out for you, and it's going to be a plug and go resource, so no math required. So basically what it is that you are going to have your goal and you're consistently making $5,000 a month in net income from August to November. Okay, cool. So then what you're going to do is you're going to take this freebie that I'm going to send to y'all, and you're going to then put in your prices for each product. So let's just start in this column here. So you see how we have P1, P2, and P3. These are our 3 products that we sell, whether they're service-based or like physical products. These are our 3 products. They're $100, $200, and $500. Now you're going to plug in how many you need to sell, and this is what you're going to be playing with. This blue column is exactly the numbers that you're going to be tweaking and trying to see, like, okay, how can I make my goal? Like what numbers, what sweet spot of a combination between these 3 products am I going to need in order to create the goal that I want? And then once you play around with these numbers, you're going to see how much in gross income you're going to have. Then you're going to see the sales taxes. The sales tax is really important because you want to have this built in so that you don't even have to really think about it. It's already built in. It's already decreasing itself for you. So the parentheses here mean decrease. And that's also why I put it in red, because red just automatically like makes you think of something like that. So the decrease in price or in the gross amount is going to be the sales tax. And then fees, I have this here, but I didn't put numbers because I just didn't want to make this example really complicated. But the fees are going to be like if you're using Square or like any like payment processing software, they're going to take a fee out of the revenue that you make, and they're going to pay themselves based on that for your sale. So that's what's going to be included there in like fees and stuff like that. But I just didn't put it because I didn't want to make the example complicated. But after you have your gross minus the sales tax minus the fees, then you have your product net. And the product net is going to be what you're making after all of that. And so you see here that we're making $6,000 gross income, but after the sales tax and the fees, we're making $5,400. And you're going to take that net income, and basically you're going to subtract your monthly business expenses, your operating expenses from that product net in order to get your net income. So this is just the product net. So this is just like, you know, after the sales tax and the fees, which are like out of like the initial things that are coming out, this is my product net. But then if you want to get your actual like net income, you're going to want to subtract your operating expenses from that. And we're going to get into that a little bit more as well. But I just wanted to kind of I just wanted to show y'all how the layout is, so that when you do come to determine if your goals are realistic and attainable for you, you can play with these numbers to kind of get this product net that you're kind of okay with, right? So this is what you're going to be using to make sure that your goals are obtainable, to make sure that you know exactly how much you need to sell a product 1, 2, and 3, so that you can get the income amount that you're hoping for. So if you want to make $5,000 a month, that's great. If you have $400 in monthly expenses, as you see here, then all you need to do is sell 25 of the $100 product, 10 of the $200 product, and 2 of the $500 product. And then you can be like, oh, actually, that's really not as bad as I thought. Like I was making this way more bigger than what it needed to be. Like I only need to sell 25, 10, and 2. In total, I really need to only get like 37 people to invest in me a month. That's great. And so you see how we can make our large goals, but then bring it down to something that seems so much more attainable for us by breaking it down and seeing what really goes into making that goal obtainable for us. Does anybody have questions about this? I know that like the numbers and the graphs and stuff like that can be a little confusing or a little daunting. I really want to make sure everybody kind of has like the basis for this set. When I do send you the freebie, there are going to be instructions. You are going to be able to DM me and ask me questions about it. But literally the only numbers that you have to change are these numbers. Put in the sales tax for your area, and then put in the fees that are there, and then everything else is calculated for you. So really, like, math is not required. You don't need to do times 100 and divide this by that. Like, you don't have to worry about all of that. It's going to be automatically calculated for you. Does anyone have any questions? If not, we're going to go ahead and move on. This is, again, understanding how to achieve your goals. So you set the goal. Now we need to know exactly how we're going to be able to get there. So part one, again, just kind of going back really quickly, is breaking that large goal into smaller goals that you can start making today. And then part two is being able to understand what that actually means for your business and how much you need to sell in order to reach that goal. So the next part that we're going to get into is how to create a budget for your business. And the main thing that I want to drive home here is that the purpose and the structure for the business budgets are the same as your personal finances. The only difference is the things that you're going to be including in this budget. So normally for your personal finances, you're including like utilities, you're including things like food and your phone bill and car insurance and stuff like that, right? The things that we need in order to live a lifestyle that's going to sustain our work environment, sustain our living necessities. And so here, the difference is what is going to keep your business alive. And that's what you need to be thinking about for your budget. So here we're going to have savings. Here we're going to have operating expenses and supplies. So honestly, screenshot these 8 things because these are the basis for any business. And maybe you don't need payroll because maybe it's yourself, but you are part of that payroll system, but it might not be traditionally in the payroll. We're going to talk about that. But you are going to be having to pay yourself. That does come into CEO payments. Payroll is more or less for like outside payments to other people that are helping you run your business. Taxes and sales payroll. Definitely listen, you need to think about taxes. A lot of people don't. And that's a large part of why they fail, is because they're not putting in that tax accounting, and then they're kind of falling short on that, and then they're falling behind in their finances. Advertising and marketing, very important. You want to reinvest into your business within advertising and marketing. Investing back into your business. That can look like you going out and having a course that's going to increase your knowledge about marketing. That can be you going out and investing in a budget coach to help you learn how to budget for your business. Like, these are all things that are going to be investing so that your business can run a lot more smoothly. So these 8 things are going to be the basis of what you need in your budget when you are looking at how to properly organize your finances for your budget. Let me go ahead and look at the chat. If you don't have a payment processor already, most charge 2 to 3%, correct? So you can use that number to predict your fees. 100%. I use Square. They definitely take out about 2% of my net earnings. I mean, not my net earnings, my gross earnings, so that they can pay themselves, which is normal. And you also can see an example, like when you go to certain like liquor stores or like corner stores, they say, oh, we have a minimum of how much you can spend for using a credit card, and that's because of the payment processing fees normally. So all of that is always like incorporated in there. So thank you again, Akia, for dropping that in the chat. Keeping your finances organized for tax time. Tax time is always framed as like this daunting thing, but here are a few steps to make it a lot easier for yourself. One, you want to keep your business finances and your personal finances completely separate. Like, this is number 1 rule for accounting, and accounting is the language of business. Okay. So you really want to keep your business finances and your personal finance completely separate. And I know it kind of like blurs the lines when you're a sole entrepreneur. You have like one of those pass-through entities like a LLC, where you are putting the taxes on your personal tax return. But mainly when you are operating, you want the operations to be separate. Okay, you don't want to be spending at Office Depot for your business on the same card that you're spending at the grocery store. You really don't want to do that, because when it comes down to tax time and you're trying to separate and organize these different things and create them into different categories, it's going to be really hard to separate those and to remember. Okay, we're looking back on a whole 12 months. That's really hard to do. So you really want to make sure that they're separate and everything is already clear for you, and also keep receipts for everything. And the reason why I say this is because the IRS is a thing and they are allowed to do audits whenever they want to. It's rare for smaller businesses that aren't really like making like thousands and thousands of dollars, but it is really, really important for you to keep receipts for everything. And this will also help you, like even if you're making donations to like the Goodwill or something, and you're able to have a receipt, and then you can put that on your taxes in order to get like a tax break because you are donating, like things like that. You really want to keep receipts for everything. Also, another big thing for keeping receipts is like business lunches. So if Akia and I went to lunch and we're talking about this webinar and saying, okay, how are we going to plan this out? We can write off the meal that we just ate because it's for business. So things like that, you really want to make sure that you keep receipts for that, keep business notes for that day, just so you can prove and say, hey, no, this was for business. I'm not BSing you. Here's the proof. Here's the receipts. And then another thing is using accounting software, like Akia mentioned before, like QuickBooks, to avoid missing any expenses and easier filing. QuickBooks is a savior, y'all. Like QuickBooks does a lot for you. It can be an app on your phone. It can be an application on your computer. And really the main benefits of using QuickBooks is you can literally take a picture of a receipt and attach it to an expense. So say you pay your bill for your meals, you can literally take a picture of that receipt right then and there, attach it to that expense, and you're done. You don't even have to think about it. You can throw that receipt away. So it really, it makes your life a lot easier as an entrepreneur. It creates the financial reports for you. So like a balance sheet, an income statement, it creates those for you based off of the transactions that you had. It connects to your bank accounts. So you can connect your business banking account to QuickBooks. And anytime you swipe that card, it's going to automatically pop up on your QuickBooks, and it's going to ask you to categorize it, and categorize it based on the categories that you set for your business. So maybe it's some supplies for your business, or maybe it was a sale, or maybe you actually made an investment in a conference that you went to. So then you're able to categorize it so it knows where to put it and where to file it and how to organize it for you. So again, this is like streamlining the organizing your finances for tax time. And if you do it constantly every day, it's not going to build up and be this huge daunting process. And your accountant is going to be able to go in and say, okay, cool, I have these statements. Let me just send them on over. And another great thing is that QuickBooks and TurboTax are in the same company. Okay. So it's all under Intuit. So if you know about Intuit, then QuickBooks is under Intuit, TurboTax is under Intuit, and you can actually just like go ahead and send your information from QuickBooks to TurboTax, and it's a lot easier as well because it has that like integrated system. So definitely I would, this is not sponsored by QuickBooks, but I would check it out because it's definitely a thing.
And if I could jump in, Jada, just really quickly, 10 out of 10 recommend QuickBooks. Like definitely get you QuickBooks. What I'm going to do is I'm going to attach in the description a link to QuickBooks so that you can go ahead and use QuickBooks, as well as the people who are here live. I'm going to make sure to email you links to some of these tools to make it, we want to make it super easy, right? And I also want to jump in and tell you that what Jada is telling you, like, listen to this, because QuickBooks does create those financial reports. And I think one of the biggest mistakes that a lot of business owners make is that they don't look at their financials they don't look at them. They just think, oh, I got some money coming in this month, so I could go spend on this new inventory, or I can go spend on this new business lunch, or I can go spend, like, you're not actually looking at the numbers. And QuickBooks makes it like aesthetically pleasing for you to see how much you spent this month and how much you brought in. Is there a big gap between that? And so when you set that SMART goal that we talked about earlier, you can see that you actually hit that number, and they'll tell you your gross, they'll tell you your net based off of what you spent. Like, QuickBooks will help you build a healthier business, because someone put it to me like, cash and sales are the blood of your business. Do you have blood running through the course of your business's veins right now? And what Jada is helping you do is set up the veins and the arteries for the money to start coming in and for it to all make sense. So please use that link to use QuickBooks, and you know, it's worth the investment. every penny. I don't regret anything about. I would used to keep all my on a spreadsheet and have to maintain. It was a lot for me as a business owner. QuickBooks made it simple. Isn't We are not sponsored by QuickBooks, although we should be.
Right. They're
But
listening.
QuickBooks 10 out of 10 recommend.
Yes, and thank you for that beautiful analogy as well, because that's exactly what it is. This is going to allow your business finances to flow a lot easier. And the thing about it is, it's like when you start, like a lot of times we think, oh, let me start making money before I implement this type of stuff. No, implement this type of stuff before you even start making money, because you want to set up the system so that it can just flow naturally as soon as it starts coming in. That's also going to tell the universe that you're serious about it. Okay, it's gonna tell God you're serious. Hey, I don't even have it coming in, but I'm believing for it to come in, and that's why I'm setting up this whole structure, because it's about to flow, and I need to be prepared for when it does. So definitely keep that in mind as well. So that's why you're here. Shout out to you. You're doing some amazing things by even being on this webinar. So yes, claps to you. Moving on to lines of defense. This is really, really important because, again, number one reason why a lot of businesses fail is because lack of funding, lack of resources with finances, and just like not having enough money to start paying your operating expenses. So setting up these 4 lines of defense for running out of money is going to help tremendously. So number one is a contingency fund. So this is just going to be a small amount of money kept inside of your checking account to avoid overdraft. So say that you usually get paid every Thursday, or you usually have like your income coming in from Square and put it in every Thursday, but one of your bills said it was going to be coming out on Thursday, but it actually came out on Wednesday and it hit you a day early. Were you ready for that? And that's the type of thing that the contingency fund can help with. So it's like, okay, I can take these small little blows that you might not have expected, and you're not going to go into overdraft, you're not going to go negative, and then you're going to be okay. Now, emergency fund is going to be for those larger blows, those larger emergencies. So 3 to 6 months worth of monthly expenses, in case your business runs into a slow season. So Germani, like while you were saying, okay, businesses make money, right? Yes, I was in a slow season. I was not making any income in my business, but during that time, there was an emergency fund there to continue to help pay for those monthly expenses like Canva, like QuickBooks, and Google Meet, things that I use to keep my business running. I had 3 to 6 months worth of expenses to make sure that I was okay to have a 3 to 6 month worth of a slow season. And so you want to have that security in your business, because you don't want to have a slow season and automatically have to shut your business down. You want to be able to replace that income with something else, and that could be your emergency fund. Even like with COVID, for example, that's a huge example of how a lot of people got caught up, and why a lot of businesses had to close down is because they weren't prepared for that. And so that was a really, really large example, because you probably needed like 12 to 24 months worth of expenses. But in this case, you at least had like a buffer amount to where you can even get your head right. You know what I'm saying? Like 3 to 6 months to get your head right on how we can not adopt, but adapt to this new way of business with COVID is something that you really don't want to take for granted. So have an emergency fund, have a separate savings account, separate from your checking account, that's going to be able to help you with that. And then number 3 is lines of credit. So we usually think of credit as like a scary thing because of personal finances, but in business finances, this is something that's going to really, really help you out. Having available credit is like priceless, because one, that tells other lenders that you are able to manage this and you're able to be trusted with this type of money. And then they're going to be able to give you more of it the better that you manage it. And then also you're able to create things outside of using your own finances. So lines of credit have like so many different benefits within your business, but in this term, in terms of like a line of defense, this is available for like large emergencies that really, really happen. So say that you spilled coffee on your computer and you don't want to spend your emergency fund. You can go to that line of credit, put that on your credit card, on your business credit card, buy a new computer, and then pay it off over time with your business income. So things like that. That's why your credit is there. It's essentially like another emergency fund for you that you obviously have to pay off, but it's there as a necessity. As a resource for you. And then number 4 is other streams of income. So even though you have your business and it's running well, you really want to make sure that you have other streams of income. Even if you're not an entrepreneur, even if you're just living life and you want to continue to build these lines of defense for yourself, have other streams of income set up because what if your job decides to let you go? Then yeah, you have your emergency fund, but then you also have something there bringing in other money that can kind of take that load off your emergency fund as well. Same thing with your businesses. If you are using your business as like a product-based business, but then you're at the same time teaching courses on how to set up a product-based business, that's another stream of income that you can fall back on if that other income is in a slow season. So it's really about having these other things in place just in case. And that just in case comes around. Okay. Don't think that it's like something super rare. It can be rare, but it does come around like at least once for every entrepreneur. And you can speak to a lot of successful entrepreneurs, and they will tell you that having these four are really, really important. So I would definitely write these down and don't take these lightly at all. Start building these up. Start working on each one of these. Does anybody have any questions about these before I move on? Nakia, did you have anything that you wanted to add?
Nope, you killing it, girl.
Thank you. Okay, so moving on to the last topic here, which is like a major topic that we all are wondering about, how to pay yourself from your business. So the number one thing is when. When should you start paying yourself as an entrepreneur? Here are a few tips to keep in mind with paying yourself without hurting your business. I know it's really easy. We get that first sale, we get, that first notification on our phone that so-and-so then bought such and such. That's amazing. Congratulate yourself, pat yourself on the back, but do not pay yourself from that first sale. And the reason why I'm saying this is because your business, it takes money to make money. So your payments, number one, should be coming from your business's net profit, which is your revenue minus your operating expenses. So it should not be coming from your gross. It should be coming from net. You want to be able to make sure that your business is good, and then you can be good. It's like having a baby, right? You want to make sure that your baby is good before you're good. And so that's why you really want to make sure that you're paying your operating expenses before you pay yourself. And that's also another reason why it's good to have multiple streams of income, because while you are in this startup phase and that seed phase of your business, that you have other streams of income fueling you and helping you pay your living expenses, because your business is paying its living expenses so that it can survive. So definitely think about that as well before you quit your 9 to 5. You really want to make sure that your business is like functioning on its own well, and then able to support you as well. And then also another thing is to pay yourself a percentage of your net income so that your payment can grow with your business. So you might be making $50,000 a year now, but if you're making $100,000 the next year and it's doubling its revenue, you want to make sure that your payments are actually growing with the business. So paying yourself a percentage allows it to grow as your business grows. So that's one thing too. You can make it a fixed amount, but make sure that you're increasing it as your business increases. And the easier thing is to just honestly pay yourself a percentage so you can automatically make it correlate and match. And then the last thing here is to remember, even though your business is making money, be sure not to start paying yourself until it's good. So that's basically what I was saying earlier. Make sure that you have a good sense of cash flow and that's consistent. Okay. That first month, you might be excited, but you really want to make sure that you're hitting those numbers consistently before you actually make any changes or start paying yourself from that number. And then the income projection sheet that I showed y'all earlier with like the table and the numbers and the graph and stuff like that, use that plus your business budget to help you project the revenue that you need in order to start paying yourself and taking out those withdrawals. So like if your goal is to make 5,000 and you want to pay yourself a percentage of that, you need to make sure you know exactly how much you need to make sales so that you can get your business in order and then also get yourself in order. So use those, play around with those numbers to see like how much you can pay yourself and when you should start paying yourself as well. And that can actually go ahead.
I was just gonna chime in and kind of talk about too. What you said is so important, and I noticed that you said what you need to take owner withdrawals at the bottom of the page. And you can correct me if I'm wrong as well, but one thing that I'm learning as a business owner, right, is that the good thing about being an entrepreneur and owning your own business is that not only do you have the opportunity to work inside your business, which means that you are an employee of your business, which means you can employ yourself, which means that That's an employee expense, which counts as an operating expense. You can give yourself a title within your business if that's what you want to do. So I'm the owner of the Hustle Lab. I'm entitled, whatever the business profits, I can do what I want. I can reinvest the business, or like you said, pay myself with that. I can take my ownership withdrawals. That's how I get paid, because I was the entrepreneur who set up the structure. But if I set up the structure and I have employees, employees work inside that structure. So if you're working inside of your business, not only am I the owner, I'm the lead marketing consultant. I can get paid the salary of a marketing consultant as set out by my company. So that's one thing that I had heard before, and you correct me if I'm wrong, if that is something to incorporate into your budget. But it was something I had heard from a workshop I went to before, and just understanding that I'm a service-based business, right? Social media marketing is a service-based business. In order for me to deliver my businesses, that costs me and my time. That me showing up and creating social media strategy, posting on social media for other businesses, that's me fulfilling a role, right? That's a lead consultant. And a part of my goal is, I don't think I ever want to not be a consultant, but ideally, I would create the position of the lead consultant, eventually fire myself and hire somebody into it so that I can just play the role of the entrepreneur. So thinking about that helps you to make projections as well. But Jada, like, tell me your thoughts on that. How do you feel about incorporating yourself as the employee and the entrepreneur?
Well, we're actually gonna get into that. Let me see. Is the next slide kind of breaking that down? Yes. Okay. So basically, with that, for any pass-through entity like a sole proprietorship or LLC or a partnership, your business is not being taxed itself when you take owner withdrawals, and that's why they really recommend that rather than salary. Because with salary, it has to be within lines, right? You can't be paying yourself like, if you are a lead consultant, you can't be paying yourself like $200,000 a year, and that's not the market value for it. You know, like the IRS is gonna come to you and be like, "Yo, like you're wilding." So you have to you have to really make sure that you understand what it means to make yourself an employee, because it's different in taxation. So if you're doing an owner withdrawal, the taxes come out on your personal side. But if you're doing salary, then your business is paying taxes and you're paying taxes personally on that salary. So there's differences in taxation, and usually they say don't pay yourself a salary unless you're like a corporation, because then your business is taxed separately. And so whenever you are a pass-through entity, then you are basically putting it on your personal taxes, and that's when your personal taxes are subject to self-employment tax and the federal tax and the state tax and stuff like that.
Yep,
So kind of
you just
go
hit the
ahead.
nail on the head. I just wanted to tell
Hmm.
you, because as an LLC, you're right, we're pass through entities. The government doesn't care how much money you pay yourself or don't pay yourself. They're just looking at how much money did this business make, and
Right,
they just tax you based off of that. But when you're a corporation, you designate yourself a completely separate entity that needs to be held at corporate taxing. And so then putting yourself on payroll through your business, you will affect, your business is paying a payroll tax to pay you your salary, as
right.
different than you personally paying the tax. That was spot on. Thank you. I needed that connection.
Of course, yeah. And so like if you're thinking about it now, so like with your 9 to 5, right? You are having taxes taken out of your paychecks. A lot of times we hate it, and I understand. Trust me, I'm one of them. But with having the taxes taken out, you're only paying half. So understand that. You're paying half of the taxes that's actually required to be taken out, and your company is paying the other half. So when you have a sole proprietorship or an LLC or a partnership, you are responsible for paying both halves. So now you're paying the whole thing. So that's also something that you really, really want to take into account. So kind of get into the bullet points here with an owner withdrawal. That's technically the accounting term for it. When you take money out to pay yourself as a pass-through entity, you're taking out an owner withdrawal, and no taxes are being withheld because you're taking it out of its profits instead of like the full gross and the revenue and the personal income. However, but you need to start budgeting out of that for your tax implications when you do go and file your tax return between like January and April. So you need to go ahead and make sure that you're setting aside some of the money and taking that out for yourself still. But the only difference is, because I know you're kind of probably thinking right now, like, hey, well, what's the difference? The difference is that personally you're paying the entire tax instead of splitting it between personal and business. So your business is not being affected in this type of taxation, rather than you being a corporation and your business is being taxed and then your personal is being taxed. So when you are doing it this way, the personal is being taxed the full 15.3%, which is rule of thumb for taxes, because it's 12.4 for your social security and 2.9 for your Medicare. And that's basically called like, I think it's called like FICA, which is like, what is it? Federal income taxation, or something. I forget the exact terms for it. But basically that's a specific set of taxes that are coming out every time for Social Security and Medicare. Even if you look on your like pay stubs today, you're gonna see that on there, but it's gonna be like 7 point something rather than the 15.3. But on top of that, you have your federal taxes and you have your state taxes. So all that has to be incorporated into you paying yourself, because it is going to be subject to that when you start filing your personal tax return. And then you usually do pay yourself self-employment taxes on earnings from self-employment that are more than $400, which is usually, like if you're paying yourself, you're usually making more than $400 a year. So you're usually going to be subject to self-employment taxes. They made it real low because they were trying to play with us, but they made it real low. But basically, like you see here, if you're paying yourself more than $400 a year, you're going to be subject to this type of tax. So make sure that you are saving up for that. Don't just think, oh, I'm paying myself, I'm an owner, I can do whatever I want, I don't have no taxes. No, there's still going to be taxes taken out. It's just on the personal side rather than the business side. So I would still act as if you are an employee and put that taxes in like a separate savings account that's completely separate from everything else, so that when tax return does come around, that tax time, that tax filing season, you have that money set aside just in case you do owe. Because some things that can bring it down are like other operating expenses that you put out there and you paid for. Maybe you put out more than you made, then then you're not going to be able to owe or stuff like that. I would consult with an accountant. I would do that because that's really important. But I would also make sure that you're putting this money away. And hey, worst case scenario, say that you don't end up owing and they're actually paying you, then you got that 15.3% to just go reinvest into your business or do what you want to do with it, or go take a trip, like certain things like that. So it's really not the worst, but just save that money just in case. That's all I can really tell you. And for example, like me, I didn't end up owing anything, and I had that money set aside, and I went to go take a trip to Miami, and I was like, hey, let's do it. Let's reward myself for all the hard work. So yeah, I would definitely still save it up, and just in case you do, because you don't want to run into the situation where you owe $400 or $1,000 and you're like, I don't have that. And I spent it already. So definitely keep that in mind. And this can also, so the really important fact about this is the difference between an owner withdrawal and salary is that owner withdrawal, you can keep your business funds. You can that's optional. You don't have to take out an owner's draw. Salary, no, you have to pay yourself. So no matter how your business is doing, if it's in a slow season or if it's like actually booming, you have to pay yourself a salary if you opted in that route. If you're taking owner withdrawals, you can say, hey, this is a slow season, I'm not going to pay myself this month. And so this helps you keep funds into your business during a slow season rather than salary where you have to pay yourself. So that is also one of the pros to taking owner withdrawals rather than putting yourself on payroll, and actually like making yourself a salary paid employee. Hopefully this makes sense. I really want to make sure it does. I'm trying to explain it in the easiest and the most simple terms possible. But make sure that if you are a sole proprietorship, you are a partnership or an LLC, that you understand that you're passed through, and this is passing through from your business to your personal, and that's basically what pass through means. And that you are going to be responsible for taxes even on your owner withdrawals, but it's just on a personal level rather than on your business taxes. Does that make sense? Yeah.
Yeah, girl, that I just said in the chat, you made a few things click for me. And I was debating between like, do I give myself a salary or do I just keep the owner withdrawal? You just made it so clear. I'm keeping the owner withdrawal
Yes.
until I can switch over into that corporation role, which an
Right.
accountant had recently told me she recommends LLC until you hit $80,000 in annual revenue. Once you hit that $80,000 mark is when she usually suggests converting that LLC into a corporation. And that's where the taxation difference changes. And she didn't explain to me the way that you explained to me just now. So you actually just helped me to bridge the gap between what I've been talking about with, like, people that I know in that industry. Sometimes they get caught up in the taxation jargon. They don't break it down enough to where I can understand as a person, where I'm good with numbers, but the IRS ain't coming to get me. I need the experts. Come do these taxes so I can stay out of jail.
Right. Exactly. No, okay, good. I'm glad that this is making sense, because this was something that I had to understand too. And I was like, wait, what's the difference? Like, it's still the same amount of taxes being paid, but it's just about who's paying it. So yeah, I definitely am glad that I'm able to make this clear for y'all. Okay, so since we got that down, we're gonna move on to an example. So for what does really like paying yourself look like? So say that your net earnings are $100,000 a year. And honestly, when you're first starting out, you don't want your operating expenses to go above 25%. That's just kind of general rule. So here in the example, I have 20% for operating expenses. So you're spending about $20,000 on your business. I said $100,000 just so the math can be easy and we can like kind of get percentages and stuff like that. So with 20% of 100,000, that's $20,000 for your operating expenses. Maybe you have like a media production team and like you're paying for that and you're like outsourcing for that. And maybe you have like expensive softwares. Maybe you're investing into a lot of equipment like cameras and stuff like that. So operating expenses, $20,000. And then you have $10,000 for your savings. And the reason why I say this is because you actually want to have your savings be a minimum of really like half of your operating expenses. And the reason why I say that is because, again, it kind of goes back to your emergency fund about being 3 to 6 months ahead of what you would be spending monthly, so that you can actually support yourself for that amount of time. So if I go into a slow season for 6 months and my operating expenses annually are $20,000, by having $10,000 in my savings account, I can support myself for that 6 months and get myself back on my feet within 6 months. So that's why I say make it at least like half of what your operating expenses are, just so that you know you're fine. And then 20% in reinvestment. So I'm going to reinvest $20,000 into my business, whether that's education, furthering your education, whether that is ads, marketing. You really want to make sure you're throwing a lot of money into the business, because money takes money in order to make money. So your business is definitely something that needs money to be operating at its full capacity. So throw as much money as you possibly can at your business as early as possible. And then once you have that brand name and everybody kind of knows you, like Target, yes, they still throw a lot of money at marketing, but you don't have to throw as much marketing at Target as you do a small business that's just starting out and nobody really knows about it. Target is a staple in everybody's life right now, kind of. So you want to make sure that you understand that, yes, as a smaller business, I'm going to have to throw a lot more money at ads, because I'm competing with a lot of these bigger brands that are already like household names. And on the second note is that I'm just really small, so people don't really know me. So I got to get it in front of their face. So you really want to make sure that before you start paying yourself, where can you start increasing your budget? And the number one place to increase it is in your marketing, so that you can continue to generate leads and continue to generate people who are going to then reinvest and increase that income for yourself. And so kind of just looking at this, that 2020, that's 40 plus 10, that's 50. So you have 50% left over for an owner withdrawal at making $100,000 a year and your current expenses. So then you're going to be withdrawing $50,000 annually, and that's about $4,100 a month gross. And then after taxes and, the self-employment taxes and the state taxes and all that stuff, and then once you like put all that away in the separate savings account, then you have that amount. But you really want to make sure that you're able to pay all of those other things first and then start worrying about paying yourself. You really want to think about yourself last in these types of situations. I know it's a little backwards because, everybody's yelling, like, think about yourself first. But in terms of business, you really want to think about yourself last, because you want to make sure that your business is good before you're good. Your business is for itself and for other people before it's for you. So you really want to make sure that you understand that, because paying yourself is a necessity, and that is one of the reasons why we start our business. But it's going to come a lot later than a lot of people expect. Starting off, because you want to make sure that you're reinvesting, and that reinvestment piece is super, super, super important for its growth, especially in the early stages. Does anybody have any questions?
No question, just a comment. It just, I heard someone say that, all this information is clicking, like it's clicking now because, when you see on social media and they'll be like, oh, let me show you how I turn $300 into a million in 1 year. Like it's like, I want to know, okay, if your business really did make that amount, how much are you actually paying yourself? Like, I want to know that part, but people aren't like, they don't break that part down.
Yeah,
Let me
and
tell
go ahead.
you how that is one of my biggest pet peeves on social media. As a social media marketer, I need for people to stop with the clickbait, stop with the, because like, okay, you built a six-figure business, your business made six figures. How much of that did you cut your check? Because you missed the part where you forgot to tell people, and it's okay, like entrepreneurship, full-time entrepreneurship isn't for everyone. There are some people who need to work a 9 to 5 to support themselves. I don't, how you get your money is how you need to be a productive and responsible adult. And a lot of people will talk about building a six-figure business, but forgot to talk about that their business budget wasn't together, and they spent almost five figures, almost the whole six figures on operating expenses. So when it came time for them to cut the check for themselves, they actually didn't make that much money in their pocket. They actually didn't have that much profit. And that's why I like to tell people I'm focused on building profitable businesses that can pay your expenses and then also pay your pockets too. But a lot of people get big on the hype of how much of that revenue that they brought in at the top of the year, and that's what your business brought in before you paid an employee, before you paid an accountant, before you paid for the new camera. That's what your business brought in. And that, as you can tell, I'm on my soapbox, that irritates me on social media because they try to sell these pipe dreams of like, oh, build a six-figure business in a year if you just follow my exact blueprint, because they want you to pay for some service or something like that. Like you said in the beginning, Jada, look at that for inspiration. This is where I could go. These are things that are possible, but this is not the blueprint for my business, for my financial plan. So yes, that irritates me the most. And I hate that social media has become a place where people want to flash these big numbers or these nice cars or this. I'm here because I wanted to be an entrepreneur, because this is what I wanted to spend my career and my time doing it. And I started a business because this is where I can't see myself anywhere else. I didn't start a business to get on social media and tell people I make six figures. That
Right.
will be a plus later on down the line for me to be able to say, okay, I checked that off my box once I hit that number. But I didn't do that for the clout. Like, let's get rid of the clout chasing on social media. And that's what that is. And I'm happy that I'm not the only person that sees the discrepancy here.
Yes, yes. Let's start looking at net numbers rather than gross numbers, right? So no, thank you so much, Akia, for pointing that out. And I was also going to say too, like, my last job, I was an executive assistant for a company called Cold Press, and they have 4 locations, and they're like a cold press juicery slash coffee shop, and they're doing the dang on thing. But I'm gonna tell you right now, those owners do not pay themselves. Even now, they have 4 locations that are booming. They still don't pay themselves because they have bigger dreams of where they want to go. They're not going to start paying themselves. That was the most humbling thing that I had to learn when they told me that. They were like, no, I don't pay myself in this. This doesn't give me any money. And I'm like, you kidding? Because I was the one doing the payroll. And I was like, well, where y'all checks at? And I was like, they not paying themselves. And they had set up, again, other streams of income. They had properties in Virginia that were paying them monthly, that were able to sustain their living expenses so that they can actually put all their time into their businesses. And so like, I'm learning all this stuff there, and I'm like, yo, they're not paying themselves. And that's why, it was really inspiring for me to see behind the scenes. I'm like, business is so much more than just paying yourself. This is a really huge topic that a lot of people are like worried about, but should be the last thing that y'all are worried about, honestly. This is like the icing on the cake. Y'all should be really worried about like the impact and how it's affecting the communities, and like how you're actually able to like go out and sustain the business itself, because it is its own living and breathing thing. So sustain that first before you can like worry about sustaining that and yourself. But yeah, so thank you for pointing that out. But yeah, that's something I really wanted to drop in there because I was so blown away. I was like, y'all got 4 locations and y'all not paying yourself, what? But yeah, so definitely think about that. And most businesses don't pay themselves for the first couple of years, at least 3. So kind of just giving an overview. One was how to set financial goals. for your business, get clear on your why, create smart goals, and understand how to actually achieve those goals that you are setting for yourself. Number two was how to create a budget for your business. Remember that the purpose of a business budget is very similar to a personal budget, so really don't overthink it. And keep your finances organized for tax season. Very, very, very important. And also set up lines of defense to protect yourself from going negative and from going into overdraft. Number three is how to pay yourself from your business. Pay yourself a percentage of your net profits so that it's after all of your business expenses are taken care of and so that it can grow as your business grows. And then also understand how your payments are taxed so that you are not getting caught up around tax time between January and April and you're sitting there figuring out, okay, where am I about to get this couple thousand from to pay these taxes, or hundreds to pay these taxes. So definitely think about that. If y'all have any questions, honestly, thank you so much for coming out today. This is a free webinar and I wanted to give as much as I possibly could because it's not about the money. As you can see, this is like the whole like gist of this webinar. It's not about the money in terms of like how much I get. It's about what I'm putting out. And it's really about the why. And so when your business is not making money, when your business is in a slow season and you're having to use your 9-to-5 payments to pay your operating expenses and things like that, like this is the reason why you have to have a why that is so near and dear to your heart, because it's the thing that's going to keep you going. It's going to be the thing that's going to keep you going while you're not paying yourself from your business and your business is booming. And everybody's like, you got a business. So like, you know, I'm about to go dine with you. Like, no, just hold on. My business is making money. That doesn't mean I'm making money. So like, just understand that it's a-okay. It's okay. It's normal. Like Akia said, those people that's on Instagram flashing, oh, I'm making 6 figures. They are not making 6 figures. Their business is making 6 figures. So understand that. And I don't want to make this a thing where like it scares you out of entrepreneurship, but I want to also let you know that it's not for the weak. It's not for the people that are just trying to make a quick dollar. It's not for that. And so I really want to make sure that I hone that in too. So if you're going to start a business, you have to understand the full depth of what that actually means. And so I feel like y'all got that today. Thank y'all again so much for coming. Akia, thank you for inviting me to come on. I was really just like so stoked that you even invited me. So thank you so much.
Yes, thank you so much, Jada, for everything you provided today, for everything that you've been able to give us, you know, these tangible tips. Thank you, thank you, thank you so much. Someone asked in the chat, I did want to answer that really quickly. Someone asked in the chat, will this recording be available? Yes, this recording will be available. I'm working on getting it on YouTube. As soon as we log off, I'm going to upload it onto YouTube. You'll have access to the YouTube. It'll be on the Hustle Labs YouTube channel. I also want to start sending links and I have your emails and everything. So if you join live, I have your emails. I'm going to send you links, not only to the things that we talked about. So we talked about QuickBooks, we talked about business credit, we talked about the freebie that Jada is going to offer us, but I also want to give you links to Jada, right? Because this is just scratching the surface. Her and I have had several conversations. Our conversations could be for hours long. This is scratching the surface of that brain. Work with her. That's all I'm saying. Personally, business-wise, work with Jada. She got it. She does the research. She's thorough, as you can tell by this workshop. So 10 out of 10 recommend Jada. Also gonna drop links to the Hustle Lab for anybody looking for social media help. We have strategy calls where if you just want some help to lay out, okay, what are my social media or what are my marketing expenses, I should say, a strategy call for your overall digital marketing. What could that look like for you in building your business budget? And then as well as we offer services available on retainer to completely manage your social media so you can focus on CEO things. But I want to let Jada, you tell me any final words. How can they get that freebie? Tell them what new projects you have coming up. Plug yourself and do it shamelessly, unapologetically. Everything listed, Instagram, all of that.
Thank you. Yes, so you can follow me on Instagram at Green Line Planner. That's green like the color green, line like a number line, and planner like a budget planner. So follow me there. I also do have a lot of plug and go resources that are under $8, y'all, on my website. So definitely run and go get those because all you have to do is really plug your numbers in, no math required. And that's really what I'm trying to do, is make it a lot easier for y'all. I also do have private coaching one-on-one with me. It is more of an investment in yourself. So when you invest in me, you're investing in yourself. And I want you to know that. And that's a huge first step in towards building a better relationship with your finances. My specialty is working with personal finances, but if you do have a business and you want me to work with your business finances, I do have experience in that as well. And then also, in order to get the freebie, all you have to do really is just send me your Gmail account, and I could probably get that Gmail account from Akia as well. Akia, right? Okay, cool. And I will be able to send you the link in order to fill out the form, which is just going to ask a couple questions, just so I can get some feedback from this webinar, so I know exactly how I did and what I can fix in the future, so that I can make this even more beneficial for y'all. And then I will send you the link to the Google Sheets freebie, so that you can then plug in those numbers. Again, another plug and go, and know exactly what you need in order to make your goal happen and be attainable and realistic for you. So again, thank y'all so much for listening. Thank you for engaging. Thank you for asking questions. If you have any questions beyond this, after even watching the replay, and you have more questions coming to your brain, definitely feel free to DM me on Instagram at Greenline Planner. I'm always happy to answer any questions that y'all have.
Yes, thank you so much. I appreciate everyone who came today, everyone who shared the flyer, everyone who watches this replay. Thank you so much. For our live audience, do you have any last questions? Tell us how we did with this webinar, comments, anything you want to say before we log off.
I just want to say y'all did amazing. I came across your page through Jada's page. So it's great meeting and connecting with new people, especially, people of color, our age and everything. Like we going out, we get it. I love that y'all provided this today. And I did have a quick question, because I didn't know if anybody else was thinking about this. What are you guys' opinions on backlogging if you're not an LLC, but you're just a contractor? Like if you did, like for receipts and stuff like that.
I would say do it, because you can even like file taxes for years in the past currently. So I would say definitely do that, because you can get tax breaks, or you can get money returned back to you if you spent more money in your business than you made. So I would do that. It's worth it. It is.
Yep, I
Okay.
would definitely say backlogging, even if it's not, well, yes, you should do it for tax purposes. Don't have the IRS knocking on your door. But besides that, to get an idea of what you've been able to do in the past years. So like if you go and backlog your receipts, you can look at how much it costs to run your business in the past, so that you can make better predictions moving forward, as well as you can keep track of how much income were you able to bring in. And then like one of my specialties is strategy. So I can look at people's income and say, okay, when you were using organic social media marketing, so you weren't running any ads and you were attending networking events, you were able to make $12,000. But when we implemented a $100 ad budget, we saw that you were able to make $15,000. So that $100 brought you an extra $3,000 in revenue. How can we leverage that knowledge to make a more informed marketing plan in the future? So backlogging can really help you not only on the sales and the numbers and the financial part, but it can also help you make the connection between sales and marketing. Your money, go ahead. I'll go off mute.
Thank y'all for this. It's been really good. I really appreciate the emphasis like on the tax part of it, and like you said, like having the IRS at your door, because that is one of the fears that I have with like starting a business and thinking like, oh, should I have an LLC or not, or like like what do I actually need, what does this entail? So seeing and understanding the background of that really like gives me more like confidence and encouragement that like it's knowledge that we might not know just like the back of our hand, but it's out there. And just being in connection with people like you both, who are able to share these resources that y'all have learned, and like, okay, y'all tapped into it. So now, we know someone again who looks like us and is around the same age as us, who makes it like, okay, this makes sense to me. And I'm not too far from this person. So it's not like they're just like talking to me or selling me on something. They're actually giving me the knowledge that they're gaining as they gain it. So I appreciate it so much.
Oh, thank you for that.
Yes, we appreciate you, because that feedback was necessary. Sometimes when you're a service provider, especially when you're new and you're young, and you're just getting experience in the industry, sometimes you're like, is this what people want? And I know, at least for me, hearing you say that made me say, okay, I'm in the right place. I'm doing the right thing. I'm going to keep pushing forward because people need me. People, we need this. And I that's exactly what I wanted to do, is support the entrepreneur that's just like, hey, I know I want to do this, but where the heck do I even start? How do I do it the right way? How do I avoid? That was my big thing. I'm like, do not send me to jail. I just want to make my coin and I want to help people. That's all I want to do. And so Jada even helped me today to say, okay, this is how I avoid, being audited by the IRS because I did something incorrectly or I wasn't paying myself the right way. So you really helped me, in combination with working with an accountant, that really just helped me to really nail some things that I've been kind of like, what is it that I'm not? What is it? You just kind of answered that for me. So thank you, Jada.
Thanks, y'all. No, yeah, this is also reassuring for myself as well. So thank you. And then also, if any of y'all do not mind taking yourself off of like the no video, because I would love to get a boomerang of everyone just kind of waving. Because y'all do mean a lot to me. So I thank y'all so much again for that. Let me go ahead and expand it so we can have all of us there. Awesome, awesome. Okay. Gonna be real quick, okay? All right, and 1, 2, 3. Awesome. Thanks y'all so much. Again, this replay is going to be put on YouTube. Kia is getting that in the works at the moment. And then DM me on Instagram your Gmail account. Kia is also going to probably send me your Gmail account so that I can send out that form for y'all so that you can get the freebie. And once all that happens, you probably will get all of that like by Monday at the latest. Okay. Because I am in DC right now, with my peeps. So so y'all are gonna get that at the latest on Monday. So thanks y'all so much. You're on mute, Akia.
Sorry. Oh, okay. There it is. Perfect. Okay. Hold on. It still says recording. Okay, I'll just edit this out. But thank y'all so much. This has been dope. If we aren't already following each other on Instagram, let's just drop Instagrams in the chat so we can follow each other and support each other.
Yes, good idea, because I want to follow all y'all as well. And thank y'all again so much.
Yes, I'm so sorry about the audio issues in the beginning. I don't know, Zoom just hates me today.
I'm just gonna go ahead and take a picture of it because that's easier.
Oh, Jada, I think you have to stop the recording because I made you host.
Oh, okay. All right, I'll stop it and then I'll also send it to you.
Okay, hold on. Maybe I can.
Oh, you stopped it.
Okay.